JP Morgan and Goldman Sachs drive America's financial markets and make billions weekly. One bulging bracket newcomer has been particularly effective. Morgan Stanley, less than 100 years old, has quickly led the business. It's one of the fastest growing and most successful Wall Street banks, and it's used new technologies to smash competitors. It's also beaten regulators over certain gray area business practices. Hey guys, and welcome back to another video of Startup Bits. Today, we will get to know how Morgan Stanley came to dominate Wall Street and what makes it unique. Morgan Stanley's rise to prominence began in the 1930s. The Great Depression dragged the country to its knees, and Americans lost their life savings. Some layoffs sold apples on street corners. Wall Street's financial speculation exacerbated the misery. After World War I, Wall Street stock traders borrowed outrageous amounts of money to acquire stocks on margin. In a self-fulfilling cycle, brokers sometimes let clients buy stocks on margin with 10% collateral. The more individuals bought stocks, the higher their prices soared, and the higher the stocks went, the more leverage they used to buy even more equities, including Wall Street's biggest banks. When the bubble burst, many commercial banks went bankrupt because they also traded securities for themselves and their clients. This causes banks to sometimes lose depositors' money. This liquidity crisis led to bank runs, and the Great Depression began in response to speculative behavior. 1932 saw the Glass-Steagall Act. The measure banned commercial banks from also being investment banks that trade securities and underwrite public offerings. One of the country's largest commercial and investment banks, JP Morgan, split. The organization prioritized commercial bankers. Henry Morgan and Harold Stanley formed Morgan Stanley in 1935. Morgan Stanley led U.S. Steel's $100 million bond sale in the 1930s and 1940s. In the 1950s, the business managed bond issues for the World Bank and IBM. In less than 20 years, they developed a world-class investment banking operation, but the firm had bigger goals. Morgan Stanley realized the ability of computers to analyze financial data after World War II. First firm to utilize computer models to assess markets and improve sales and trading. This created new business prospects. Their asset and wealth management services help institutional and high net worth clientele. They may trade their own book profitably and become market makers. Their market understanding enables them to offer superior order execution to enterprises seeking loans. They established the world's first automated trade processing system, consolidating their position as a prominent investment bank that not only underwrote agreements but actively participated in the market. Wall Street businesses go mad for mortgage-backed securities in the early 2000s, a golden moment for investment banking. These securities, which are bundles of thousands of mortgages, were thought to have minimal default risk due to diversity, therefore banks leveraged up to buy them. It was a high-yield, low-risk investment. When the housing bubble broke, Morgan Stanley wasn't going to sit on the sidelines. Nearly bankrupt, its stock fell 80%. It needed a $100 billion bailout from the Fed, the biggest of any Wall Street bank. One of Japan's largest banks injected cash. The Fed urged the company to sell JP Morgan when it ran out of funds and was about to collapse, but JP Morgan refused. John Mack followed the company's tradition of strong CEOs eager to do whatever to advance it. After nearly 30 years at Morgan Stanley, he became CEO in 2005. He was one among the first Wall Street CEOs to see the financial disaster coming. In 6 months at Credit Suisse, he sacked thousands of workers to boost profits. As Morgan Stanley's CEO, he maintained his reckless cost-cutting, earning him the nickname Mack the Knife. The corporation was near failure when the crisis came. He arranged billions of dollars in capital injections from China Investment Corp and Mitsubishi UFJ Financial Group in exchange for a quarter share in Morgan Stanley. Morgan Stanley survived the financial crisis under Mack's leadership. In the 15 years since then, the corporation has again reinforced its status as one of Wall Street's most powerful and profitable businesses. It operates securities, wealth management, and institutional asset management. The securities business underwrites bond issues, advises on M&A, and provides trading and prime brokerage services to hedge funds. Wealth and asset management serve wealthy individuals and institutions. These three segments are the company's cash cow. Morgan Stanley's revenue and net profitability soared in 2021. The company made $15 billion in 1 year, up from $11 billion the year before, which was a record. SPAC frenzy and IPO activity boosted their securities, wealth, and asset management businesses. Morgan Stanley was the most successful investment bank in 2021. 1935 present, Morgan Stanley can beat any rival. Goldman Sachs and JP Morgan couldn't stop its rise. Regulators have also failed to control Morgan Stanley. The corporation has a history of problems with the SEC, CFTC, DOJ, and stock exchanges. 1990's 9.com bubble was a major controversy. Hundreds of unviable enterprises went public because investors were prepared to invest in anything internet-related. It resembled the 2020-2021 SPAC frenzy. The bubble was larger and burst harder. In 2000, Morgan Stanley's experts researched equities for prime brokerage and other clients. It's a common tactic among Wall Street sell-side businesses. Morgan Stanley hasn't changed despite multi-million-dollar scandals and penalties every year. Their offenses haven't decreased. A $35 million fine here, a $15 million fine there isn't enough to change anything. Why should Morgan Stanley care? Last quarter, they made $2.5 billion on $13 billion in sales. At that rate, they could pay a $10 million punishment in less than a third of a trading day. Morgan Stanley is so powerful that no competitor or regulation can influence them. This wraps up today's video. Morgan Stanley has dominated Wall Street for decades. Will they ever be challenged? Let us know in the comments below. We'll see you in the next video.